Hi, welcome back to Pretty Girl Stock. I'm your host, Jasmine Bellamy, and today we're going to have an update on Tesla and NIO. Both of these stocks were on fire today, and I'm so excited to be coming to you to talk about them. Let's go over some points for today, but first I want to say thank you to all of my new subscribers. Thank you to everyone who is watching inside the United States as well as outside the United States. So looking over what NIO did today, they reached $53.75 by the end of the day, and that's awesome for our portfolios. I told you guys on the last video that NIO would do good in 2021, and they are still one of my top picks for this year. I believe that we will have great gains from this stock. This stock will be rocketing up. Let's look at Tesla. Tesla ended at $735.11 today, and that is awesome. I didn't expect it to reach that amount, but it did, and this is great for us. It's great for our portfolios. This is another one of my top picks for 2021. The EV market is about to explode this year. At this time, NIO has a market cap of $83.60 billion. Tesla has a market cap of $696.81 billion. Both of these stocks are really on fire. Okay, so my prediction is that NIO will be going up. I said that they would make it to $100 on my last video, and I believe that will still be true. NIO will probably reach over $100 by December. Tesla, they just got a new price target upgrade to $800, so we can really see them taking off. I think that they will exceed the $800, and they will most likely make it to at least $1,000 by the end of the year. But let's get into 10 mistakes that new traders make in the stock market. The reason I'm going into this is so that you can avoid these mistakes and you can make great gains. I want you guys to be very successful this year. On the last 3 months, I am up over 100% on my personal portfolio, and I want you guys to get the same type of gains. We can really win if we avoid these mistakes, so make sure you have a pen and paper, check these out, write them down, keep them at heart, because I do not want to hear another story about someone messing up in the stock market, making rookie mistakes. So number one, selling too early. Make sure you do not sell your stocks too early. Make sure you know about those special events that are coming up, about the company's plan, about new inventions, about new mergers. Make sure that you stay invested in your knowledge in the company so that you know when to enter, when to exit, how long to hold on to. Because one of the major mistakes that I personally made was selling some stocks too early. I remember I sold NIO at $7, not knowing how valuable that stock was. So make sure you stay invested and you know what's going on. Don't sell too early. Number two, buying too high. If you buy the stock too high, a lot of times you'll have to wait for your money to come back if it takes a dip or a pullback, and that's absolutely normal. Make sure you're not selling your stock too high, because a lot of times as new investors, we get a little antsy because we think we're losing money, when in fact, the market is just fluctuating. Number three, having a plan. Make sure you have a strategy. No matter what it is, don't just jump into the stock. Make sure you have a game plan so that you can attack this stock and you can win. Number four, researching. Make sure that you have done your research before buying into a company. Remember, you're not buying just a stock. You're not buying a certificate. You are buying into a business, into a company, into the CEO, into their new plans, their new inventions, their new technology. That's what you're investing into. Number five, chasing a stock. Don't chase a stock when it's on the run up. Don't chase a stock when it's on a run-up, unless if you want to make some quick money and take a chance. But if you want to be an investor, wait for that stock to cool down, wait for it to pull back and come down before you get invested. I know it's tempting when you see that stock taking off. You want to jump in and throw your money in. It's exciting, especially around 9 a.m., 9:30 a.m. Those stocks get to running and you want to jump in and buy. But I want you to be calm. I want you to think about it. Take your time, breathe, and then buy the stock after it has come down a little bit. Sometimes it takes a few days, and sometimes you just have to weigh it out because sometimes they don't go back. So, but 9 times out of 10, that stock will come down. Number 6, buying the stock at the market price. A lot of times when you buy the stock at the market price, you're going to pay a few cents above where the stock is actually at. If you just wait and be patient, you can set a limit buy, and 9 times out of 10, you can get that stock for a few cents cheaper, maybe even a few dollars cheaper. So set your limit price because the stocks will usually fluctuate a few cents or even a few dollars throughout the day, and you can catch the stock at a lower price. Also, you can set an alarm on your stock to notify you when the price goes down, and then you can buy. Number 7, over leveraging. Make sure that you are not over leveraging with the use of margin. I know it's tempting to use margin and it can help you build, but you want to make sure that you play it right. So a good rule of thumb for me personally, and I'm not a financial advisor or expert, but this has helped me in trading and investing. If you buy your stocks on leverage, make sure you leave a nice cushion around that number that you have to keep up. Whatever keeps you from getting a margin call, make sure you have extra money built around that you either have on standby or that you have already in place. Do not use 100% of the margin that a stockbroker offers you. That's just my advice, and that has helped me. When you use 100%, if the stock comes down 3%, 5%, you're going to go into a margin call, and that can happen at any given moment. So I would say somewhere around 50%, no more definitely than 70%. So you want to leave that margin right there. Okay, number 8, buying in a crash. That's a great time to buy. If you buy in the crash and it's a quality stock, we know that the stock is going to come up after the crash is over. So have money put to the side. Don't always keep all of your money invested at one time. Have your money to the sideline so when those crashes come, you're buying in, and then you can see almost an immediate profit most of the time. Once the crash is over, it may come back that day. You may see a gain a day or two later. And that has just been my personal experience. You know, it will vary from stock to stock, but if it's a quality stock, one thing I've learned that those stocks will usually retrace and those dollar amounts will come back. Number 9, holding on to a volatile penny stock for too long. So I'm not against penny stocks. Penny stocks are a great way to make tons of money in the stock market, but you have to be able to read the fundamentals. You need to know the charts. You need to know how to read candlesticks. You need to protect yourself because sometimes those penny stocks are running up for almost no reason. They're running up because people are excited about something. They're excited about a merger. So before you enter into a penny stock, you have to make sure that you know why you invested your money. Even if it's for 10 minutes or 10 seconds or 10 days, know why you're invested at that time. Understand the reason behind why the stock is running up. If you get into a penny stock and it runs up real high and it's just for not a good reason at all, you might want to get out. So make sure that you do not hold on to volatile penny stocks for too long. This could potentially really affect your account and really bring you down hard and fast. Now, if you know why you're invested and you see potential in this stock, I would say just put a small percentage of your money in there and let it sit. If you see that this penny stock will have a reliable future, they will be growing, and there are something that you really truly want to be invested in and you believe in, then I would say go ahead and sit through the fluctuations and wait it out until you get to the number that you are comfortable with. Number 10. Not understanding candlesticks. I have a lot of people ask me. They ask me how to day trade. Do not start day trading if you don't understand how to read candlesticks, if you don't understand charts and data about stocks. Because if you jump in and you start day trading and the stocks start to crash on you, you will not know what to do. You're going to buy too high. You're going to sell too low. I mean, it's just a disaster. Do not be in a rush to day trade. but be in a rush to learn the skill first. There's a game to it. So once you understand the game, then you can play if you choose to. I found that it's better to be an investor in a quality stock, not have all of the stress of day trading. And that's me personally. That's what I like to do. Just find a quality stock and ride it out. If you get your money in a month or two as opposed to the same day, you still got your money and you can go about your business and enjoy life. Well, I want to say thank you so much for watching. Make sure you are subscribed. I will be coming to you every day on this channel. We are gearing up for 2021 and I want to see you win. And if you haven't already, please hit the like button, share, subscribe. This channel has been created to help new investors learn how to research, learn the stock market, and stay on top of the latest news. Thanks for watching.